Hello, everyone. Thank you for tuning in. Today, as the Nifty is touched 25,000 for the very first time, we thought we should make this video on Nifty at 25,000. What should you do, buy or sell? Well, what will this video cover? Giving you brief reasons for why the run up in the markets, our view on the markets in general, and action points for investors. So why is the markets running up? No single reason, but profitability of corporates have been improving. Nifty and Sensex valuations are still not expensive. Markets are at a record high, but given that annualized growth in profit has been strong, markets don't look very expensive. Domestic investor money is finally coming into the stock markets via mutual fund SIPs, provident funds, NPS, insurance, IPO, direct equity. So finally, markets are getting their due recognition. FII flows are slowly picking up and likely to pick up further once US Fed starts cutting rates. Last but not the least, importantly, speculative activity is surging. So that is also pushing up the markets. So our understanding of the markets, well, markets, as I already mentioned, are more or less at fair value, not too cheap, definitely not very expensive as well. But hot segments like PSU, small cap defense are looking overheated and can give a negative shock for a few investors. Outlook from here on near term can be volatile due to global geopolitics, US elections, Trump likely to come back. So things can be a bit volatile. Also, there is a slight slowdown in economic activity globally, and profitability may get impacted due to rising costs. Medium to long-term views, well, this point I've not changed from the previous presentation. Very positive with a few 5-year view. Sensex at 1 lakh looks very likely in 2027. That's what I'd said in June 2023. Well, it may happen in 26 as well, given the rally. This is August 2024 now. This slide I have not changed at all from my June 23 video. What should investors be doing? Short-term investors with 1 year, 2 years, or even shorter time horizon, don't be greedy. Markets have done amazingly well. Please have your exit plan in place. Investors who want to invest, well, no fresh lump sum, SIP, STP investments only. Long-term investors, do look at your asset allocation. And as I've always said, if your equity exposure is more than 90%, I have not come across anybody with that, but if it is more than 90%, then you can look to rebalance, and that too slightly. Otherwise, as a long-term investor, nothing really to be done. As you've been seeing over the last few quarters, we've hardly got you to do any kind of profit booking. Only the tax-related planning can be done. Now the limit is 1.25 lakhs in the long-term capital gains. Traders, well, what to say? You've been having an amazing time, so enjoy the party while it lasts, but be ready to jump out quickly as well in case things turn as such. Summary, we're not bearish on the markets. We've not been bearish for the last few quarters and continue to hold that same position. Though you cannot get adventurous right now. There are a lot of people. Yesterday we had a call. His portfolio has been giving 19% annualized returns over the last 5-7 years with a 70-30 mix, and says, how do we look to increase the returns? So I don't have such ideas. So don't get aggressive at this stage. Market's likely to do well in the medium term, but near term, we never know. It could have some negative news flow as well. If we get that much awaited dip in the markets, grab it with both the hands. 10% fall, great. 20%, amazing. 30%, rocking. So look forward to a fall if it happens. May or may not happen, but we should always be prepared. Let's not get carried away with the market. So I thought Warren Buffett should guide you. Be fearful when others are greedy, and greedy only when others are fearful. Why leave Mr. Bean? I shared this creative just 8 months back when the Sensex was at 70,000. People who are waiting for the right time to invest, well, good luck. Don't know how long you will have to wait. Don't wait, get started. Time in the market is more important than timing the market, as we always say. Hope you like this short video. Do give us a like and share it with others who may benefit from it. Last but not the least, Mutual fund investments are subject to market risk. We need to follow regulations. Thank you.